forget again. Wonder of forgetting to record. All right. So again, we are going to be using the value line that Bishop introduced to us on that was 2 days ago on Wednesday. We can, I believe when you watch that video, you also find the trading view equivalent of this particular line. So we have something that was called the C5, which we normally use for those in the first stream program, but I won't be looking at that today. It's beyond the scope of what we should look at. So with every strategy, this is a trend following strategy. I almost always trade in line with the trend, except very occasionally. So whenever you're trading a trend following strategy, as Bishop helped us to understand, your first question is, should I be buying or selling? Basically, where am I in the market? So are we buying or are we selling? That's the first question, basically. And no matter the strategy you're trading, that's basically the question you want to answer. Should I be buying or should I be selling? Since we are following the trend, we want to know what the trend is. So the first question we answer as trend followers to know whether we should be buying or selling is, what is the trend? Now, over time, I've tried so many things, trading naked charts, using so many things. And I just discovered that I always had issues trading the naked charts. The reason being that one, marking up sometimes, there are certain times when we get into a consolidating market where marking up order blocks and all those things can get tricky. And I'm the kind of person that I don't like stress. I trade as I try to make my trading as simple and whatever as possible for myself. So once I come into the chart, I look at the chart, I know within 30 seconds whether I should be buying, whether I should be selling, whether my setup has happened, and all that within 30 seconds. If I can't say within 30 seconds whether I should be placing a trade or not, that strategy needs work. So that's basically where I trade. So I want to be able to look at my screen and I know within 30 seconds, should I place a buy, should I place a sell, or should I walk away? So those are the three things you do as a trader. You're either buying, you're selling, or you're doing nothing. And majority of the time, you should be doing the third one, doing nothing. So with this, our bias is derived from our value line. Our bias is derived from our value line. So once this, and we're on H4, so we are taking our bias from the H4. Once our value line is green, we are looking to buy. Once our value line is green, we are looking to buy. And if it is red, we are looking to sell. Now, that's this particular value line is basically made up of what is going on with the charts, like normal price action. Now, I add a second component to every strategy I trade, or almost every strategy I trade, with regards to Forex, every strategy, and that is the component of volume. So we talk about COT and all those things. Again, that was very difficult for me to always master and keep up with. So I just developed my own system of knowing how to measure volume in the market. So instead of all the difficult, all those things that are going to volume profile analysis and all that, I just basically use one of the volume indicators that come with MT4 naturally, which is the unbalanced volume. So you have two of them that I love to use, the unbalanced volume and the accumulation and distribution. Now, using them on their own, again, I found it to be a bit problematic. So what I did was to add moving averages to them. So basically, it gives me a moving average of what volume has been doing. So it gives me an average of what volume has been doing over time. So if we are in a buy scenario and volume is increasing, then that basically means that it's a confirmation of the fact that we should be buying. All right. So if we are in an uptrend and volume is increasing, which is basically what OBV shows you, volume is increasing to the upside, then we should be looking to buy. And if volume is negative, we should be looking to sell. So based on that, I created an indicator. I created my own indicator, which I call the OBV with ME. So basically, these are two moving averages that track the volume movements in the market. So once the blue one is above this purple one, is a signal to buy. So sometimes we have a situation where the value line is saying buy and the what's it called? The volume is saying sell. In that case, we take both depending on the rules, whichever one meets our trade rules at each point in time. So I've talked about how we get our buyers in the market. We are either using our value line. So when our value line is green, we are looking to buy. And when the value line is red, just a moment. When the value line is red, we are looking to sell. If it is green, we are looking to buy. If it is red, we are looking to sell. And that's just basically how it works. Secondly, we'll look at our volume. If the green line is above the purple line, then we are looking to buy. So as you can see in this chart, the blue line was above the purple line for a very long time, since the 8th of February. And you can see that AUDJPY has just been buying virtually ever since. All right. So it's one thing to know whether we should be buying or selling. The next question that we need to answer is, where should we be buying or selling from? I'm rushing through this because these are concepts that Bishop has already taken time to explain. If this is your very first session, then you might just want to go and watch the recordings of those classes since Monday. All right, so the next question I want to answer is, where should we be buying? All right, so we've looked at the fact that when we want to buy at a discount. And when we are looking to sell, we want to sell at a premium. So we want to buy when the price is low, and then we want to sell when the price is high, basically. All right. Now, the issue is how low is low and how high is high. And that is basically where we frame a lot of rules around to help us to identify when we have our conditions of discounts and conditions for premium. So as far as the strategy is concerned, the way I basically frame my own premium and discounts, when I started, I used to use oscillators, so such as RSI, stochastics, and all that. But if you understand the way those things are calculated, there are some errors that can arise. They're not really, I won't call them really errors, but there are some mismatches that can arise from the way those things are calculated that does not really do justice to what we are trying to do. So apart from the value line, getting my buyers, every other thing I do basically is based on price action. I use the naked charts, right, to do virtually every other thing. So to define our discounts, I basically wait for price to trade lower than a bearish day. All right, so basically I like to trade off the highs and the lows of the week. That is the way I trade. I don't trade anything that is not the high and the low of the week. So that way I take about one trade or so a week per pair, and I'm done as far as that pair is concerned, except it comes to hit my SL and then gives me another setup. So apart from that, I'm looking to basically take one trade per pair per week. So it reduces the number of trades I have so that I don't get into the mistake of over trading at any point in time, which is something you want to pay attention to if you are going to be trading for a prop firm. All right, so I don't want to have so many trades running at a time. So that just basically fits the profile of what I'm trying to do. So number one, I want the price. I want to trade up the low of the day. Now, the low of the day, when it is created, has to also be the low of the week. So something like this. This is the low of the day. It also has to be the low of the week. So that is where we start from. If this is not the low of the week, I don't have any business. Like today, those in the current fostering program, one of the things when I was taking my own strategy, one of the things they had to do every morning was wake up, look at the charts, and based on our value lines and all these rules, we ask ourselves, do we have a potential setup on this pair today? If we don't, there's no point looking at the pair. So on each day when I wake up, the first thing I want to ask myself is, the low of this current day, is it currently the low of the week? The low of the day that has been created, the low of today, is it the low of the week? If it's not the low of the week, there's no point looking at the pair. Now, if it is the low of the week, I'm assuming that we are buying, all right? So if I'm looking at the fact that if this is the low of the week, then I'm asking myself, what was the previous day? So let's take this. This is let's just take this week, March 14. So let's go to H1. Let's go to H1. So March 14, I'll be waiting for price to form the low of the week. So let's say we are here. All right, so let's say we are here. At this point, this is Monday 14th, this is 11th, so Friday, this is Monday. So at this point, this is the low of the week. All right. Now, the next question I need to ask myself is, the price trade was yesterday bearish? So if you remember what we did, let me not go too deep. I'm not gonna start giving up first screen program content. All right. If you remember what we did when we are looking at trend, we basically say we have lower, when we are in a downtrend, we have what? Lower lows and lower highs. So the next thing I want to ask myself is, and then Bishop mentioned something also, that when there's a theory that when the institutional traders, the banks, and all those people want to go in a certain direction, they basically go the opposite direction before beginning to move in the actual direction. So some people say they do it to mitigate some of their positions, in other words, to reduce the risk on some of their positions. Some other people say they use it to fake out traders. So they get retail traders to believe that price is going in one direction and then they begin to move in the other direction, taking the stop losses of those traders, which is basically their money. So, and that is why the theory is that more than 90% of retail traders lose money in the Forex market. And I actually think that figure is higher. I think that figure should be higher, but it's what it is. So I try to follow their footsteps. So I try to follow the footsteps of those big institutional players. And how do we follow their footsteps? We wait for them to do the false move. So the false move is a situation where they get traders to believe that price is going the opposite direction. So we've gone to H4 now. On H4, we saw that we are bullish. All right, we are bullish from our value line. For now, let me even forget this OBV. Let me just concentrate on our value line, right? Let's concentrate on our value line alone. All right, so now we've known that for the week, we should be looking to buy. All right, so once we've established that, we come to a lower time frame like the H1. In the first stream program, we go as low as 30 minutes. So we come to H1 and we want to wait for them to get retail traders to go the opposite direction. So we wait for what looks like a downtrend to start. So we wait for what looks like a downtrend to start. So when we see that downtrend start, we are now waiting for them to give us signs that we are going in the opposite direction. So in this case, the way I do it, I like to wait for, I like to see two pushes to the downside. All right, remember what we said, higher highs, higher lows. For an uptrend, for a downtrend, we want to see something like this. For a downtrend, then we have push up, then we have a push down. All right, so if you're trading on only H1 or only M15 or whatever, a lower time frame, you'll basically be seeing this as a downtrend. Why? We've had a high, then price came low, or went up, and then came low. So you're seeing this, or you're seeing this high, low, high, low. All right. So basically, every other person who is just watching this lower time frames is seeing a downtrend. So some of them will want to start selling. And we have that concept is called institutional sponsorship. So they'll be looking for sponsorship. They'll be looking for people's money to use to go to move here. And so they want to take out all these people that are trying to sell here. And when we finish taking them out, we'll join their money to ours and use them to go up. Basically, I'm just using very layman's attempts to explain some of these things. All right, so let's get this off. So I've talked about our buyers. I've mentioned the fact that when we are looking to buy, we are looking for discounts, and our discounts can be found when traders have been initiated or have been deceived, if you want to use that word, deceived into thinking that we are going down. All right. So there are two ways that we can do that. One is that we can use our value line as well. So we wait for our value line to turn red, and then we start looking for price action to confirm that we are going in the opposite direction. But for me, I don't use this on H1, so I'm going to delete it. I use price action. So what do I do? I'll talk about only one today. Talk about only one method that we use. There are two ways we can see our discounts. I'll discuss only one today. We'll wait for price. Change the color of this. Let's make it blue. All right, so wait for price to run out to this. So you see this is the low of Friday. Then price runs it out. We'll wait for price to run out the lows of Monday again. So once we've seen 2 days like this running out the lows, then we have our conditions met. So price came on Monday, took out the lows of Friday. We will then be anticipating. Remember on H4, we've seen that we're in a buy. We've seen that Monday has taken out the lows of Friday. We'll then be anticipating that price will come take out the lows of this guy, that is of Monday, and then we'll be looking for opportunities to then go up. Why? When they do this, we'll have lower highs. Remember, this is the high, this is the high, this is the low of this is the low of this. So what do we have? We have higher, lower highs, lower highs, lower lows. All right, lower lows, lower highs. All right. So once they have done that, we are now looking for opportunities to go up. So there are other things that are incorporated into this, which I won't be really discussing. The issue of liquidity sweeps and all that. Bishop has touched on that a little. So once we have seen our discount rules met, which is price has taken out the lows of 2 days. So this day takes out the low of this day, and this day that we are now looking to buy from also takes out the low of the previous day. Then we can be looking for opportunities to buy. All right, now to buy, we are going to be waiting for price. We are going to be marking up the bearish candles. So as price is coming down, we are looking at the lowest bearish candle that either formed the low or is the last bearish candle before the low was formed. So for instance, when we come into this day, this takes out the low of the previous day. So this is the first candle we are focused on. And then we'll be waiting for price to close above it. We're waiting for price to close above that level. So we'll just mark it up. Let's change that. See something that stands out like okay. All right, so we're waiting for price to close above that. Price does not do that and instead goes lower. So once price goes lower than this low, the last bearish candle that we can see, which is this, becomes our new reference. So do that, and then we're waiting for price to close above it. So once price closes above that bearish candle, we have our trade set up. So I am never in a rush to take any trade. I always wait for the trade to come to me. So I always use limits. So I'm just going to take my trade. I'll draw my fibs from the bottom to the high of that bearish candle. For those who are in the first program, you also know how we use our ATR. And we use our ATR to also frame our SL. This is an alternative method, which we also discussed with the present class, of setting our SL. So once price has taken out or has closed above the bearish candle of reference, we take our trade, and that is that. So usually, personally, I target about 4R or 5R, and this met all. So the fib settings, I'll just let you guys copy that. It's basically our entry is 0. Our entry is 0. Our SL is at 1.5. CP1 at minus 1.5. 2R is -3. So just multiples of minus 1.5 for your TPs. All right, and then just an addition for those who might not know this trick, you can do this in both mobile and desktop. You can add percentage, just have this percentage $sign in your description, and it will help you to see the actual prices. So you don't have to now be dragging your mouse or your pointer to see what the price is at this point. Just basically display the price like this. So when you put in brackets, I just did it so that it makes that appear neater. So percentage plus the $sign, and then it will give you the actual prices that should be there. So on AG, this was a fantastic trade this week. All right. So can someone who is confident enough, not any member of the current fostering class, in fact, not any member of the fostering program, any person, you've not gone to the fostering program before, can you unmute yourself and give us the procedure of how we give us the procedure of how we arrive at our buys. Give us the procedure. Any person, one person, just I would ask you to, wow, nobody. Okay, I in the chat box. I understand. I don't understand what you have been saying. Put 2 in the chat box. I understand. Put 1 in the chat box. Wow. Wow. This is serious. There are so many tools, so many people who do not understand. Okay, thankfully the ones are coming. The ones are coming now. Okay. All right, so I'll just go through it. I'll run through it again very, very quickly. The first thing we want to do when we want to take our trade is to ask ourselves, are we supposed to be buying or selling? Are we supposed to be buying or selling? So if our value line is green, then we are supposed to be buying. If our value line is red, then we are supposed to be selling. Now, if you don't understand that part, please put 2 in the chat box. If you don't understand that part, put 2 in the chat box so that we'll know where we're having the issues. If we are supposed to be buying, our value line should be green. If we are supposed to be selling, our value line should be red. If you don't understand that part, put 2 in the chat box. All right, I want to assume that everybody understands that part perfectly. All right, so the question then is, when do we buy? We want to buy when price is at a discount. The question is, how do we know that price is at a discount? All right, so that is the question we are trying to answer. How do we know that price is at a discount? And I said that the way I do that is simply to check to see if the previous day, so if I am here, so this is the 15th of March, I want to buy, I'm wondering, are we at a discount or not? What I will simply check is, did Monday take out the low of Friday? Did Monday take out the low of Friday? If your answer to that question is yes, then you can proceed to the next step. Let me use an algorithmic process to answer the question then. So if Monday, the low of Monday is lower than the low of Friday, then we can continue. If it is not, then we'll forget about it. This pair will move to another pair immediately. All right. Now, if Monday's low is lower than Friday's low, the next question I want to ask myself is, today's low, is it lower than Monday's low? So if the answer to that question is yes, then I can start looking for opportunities to now buy. But if today's low is not lower than yesterday's low, again, I move to another pair. So we have 2 things we are looking at for now. One, previous day's low is lower than day before yesterday's low. And today's low is lower than yesterday's low. So those are the 2 conditions we are looking at. Once we meet those 2 conditions, then we are looking for our buys. And what do we wait for to buy? We are basically waiting for price to close above the lowest bearish candle. So the lowest bearish candle we can see, once price closes above it, that is our setup. That is our entry. All right. So I still don't understand. Put 2 in the chat box. I still don't understand. Put 2 in the chat box. I think I have made it as simple as possible. So we are waiting for Monday's low, previous day's low, yesterday's low to be lower than day before yesterday's low, and today's low to be lower than yesterday's low. It's as simple as that. That is, once that happens, we have our discount. Exactly. The low of 2 consecutive days must be taken out. So the 2 consecutive days must be taking out the lows of the day before it. All right. It must be taking out the lows of the previous day consecutively. All right. That is basically what we are looking out for. All right. So once we have that, we are set. And all we are waiting for is for price to close above this. So this is on 1 hour. This is on 1 hour. So even if, say, you are working or you are doing something else, you can simply set an alarm, and every 1 hour you come back to your chart. All right. Now, if this has not happened, you don't even have any business with the chart. or with this pair. So we can basically, if we look at this and we know we are supposed to be buying, then we can simply set an alert. All right. So if we check this and we see that, okay, Monday's low has taken out Friday's low, it means that the next condition we are waiting for is for today's low to take out this. So until today's low takes out yesterday's low, we don't even have any business with this pair. So we can just put a line here for those of us who have the paid version of TradingView and set an alert. All right, set an alert so that once price goes below the low of yesterday, it will give us an alert, and then we can now start watching every 1 hour to see whether we've gotten our entry set up. So once we get our entry set up like this, price close now move the lowest bearish candle. Our entry is at the high of that bearish candle. That is what we want to enter. So price just comes in, boom, picks you up, and we are off to the races, as they say. So, and I've showed you the fib settings. We draw our fibs from the low of that candle to the high of that bearish candle. And in about 2 days, we have, or let's say 3 days, so 1, 2, 3, we have our profit targets met. All right. So this is not the fostering program, so I won't be talking about maximum SL and some other conditions that we look at to filter our trades even further. So there are certain times there's a way to know whether the SL we have is too large. In other words, we don't take the trade, and some other conditions we look at. That is for those that are in the inner circle via the fostering program. All right, so let's look at a potential sell. Let's look at a sell. Okay, yeah, we had this on GU. So GU did some not so nice things to us yesterday. So if we go to GU, okay, GU had even turned. GU is in a good setup. GU had turned us up yesterday. I'm using a different strategy. I want to look for a situation where we had the opportunity to sell. Okay, USD card. Yeah. So I can explain the sell part. All right, so USD card. We had this. I want to explain the sell part now. So remember when our value line on 4 hours is red, when our value line on 4 hours is red, we are looking to sell. When our value line on 4 hours is red, we are looking to sell. So again, what we'll be looking for, we want price to take out the highs. 2 consecutive days, the highs must be taken. Highs of the previous day must be taken. So let's go to H1, USD card, USD CAD. All right, so this is 14th. The week starts here. So first thing we see, we ask ourselves, this is 14th, so we'll come to the charts. First question, did Friday's high take out Thursday's high? No, we don't have business with USD card on this day. So on the 15th, we'll come to our charts. Did Monday's high take out Friday's high? Yes. All right, then we might have something to do with this pair today. All right, so we now come to our chart, and then we start looking for, wait for price to take out the high of yesterday. So price takes out the high of yesterday. Okay, and now this reminds me, I didn't mention something earlier. We have what we call trading times. Oh, who is that? All right, we have what we call trading times. So we trade essentially from the beginning of from the end of the Asian session. We trade from the end of the Asian session to the end of the London session. That is when we are doing all this. And the Asian session ends at 7 a.m. So anytime from 8 a.m. is when we want to see our setup form. So this is not valid, all right, because it's outside the time we are looking at. We want to see the high of the day form between 7 a.m. That's between 8 a.m. rather, between 8 a.m. and 6 p.m. MT4 time. That's basically what we have, the end of the Asian session to the end of the London session. That's when we are looking for all our setups. All right, so on USD card, we had this. So we're waiting for price to take this out, which price did, and then close below the last bullish candle. So we are just going to be doing the opposite of what we did when we are selling, when we are buying. So when we are buying, we are looking at the lowest bearish candle. When we are looking to sell, we are looking at the highest bullish candle. So once price closes beneath the highest bullish candle, we set our limits and take a walk. So we would have drawn this like this. And unfortunately, price did not come to pick us up and just went. Sorry for our no gain, because we didn't lose, but we didn't gain either. All right. Let's look at a couple of sets, another couple of sets. Okay, let someone put a pair you want us to look at. I'll just look at two pairs and then begin to wrap this up. There's nothing too complex about that beyond that. So just suggest to put two pairs in the chat box. Suggest a pair we should look at. Gold. Why are we always worrying ourselves with gold? Okay, someone said gold. Okay, we are looking at gold. Gold is already a USD pair. Let's look at another pair. So pick another pair. Gold USD. I'm not going to take Euro USD. Pick another non-USD pair. So we'll look at, as in, gold kills more accounts than it makes. Like, I don't know. I personally don't trade gold, but we'll look at it. Gold does a whole lot of terrible things to many people's accounts. So I just tend to avoid it. So gold, let's put another pair. Let's give us another pair. I'm not taking another USD pair. EJ. All right, thank you. So let's start with EJ. Let's start with EJ. Where is it? All right. So EJ for this week, we are supposed to be buying. We are supposed to be buying. Unfortunately, EJ did not give us any setup to go short. All right, because it just basically went like that, which sometimes does happen. Not always, but sometimes does happen. So EJ just went straight away. But let's look at this week quickly. Let's look at this week so that we'll also see that this is not a holy grail. So that someone doesn't go and blow the account thinking that they have a holy grail. So let's look at this. All right, so let's go to H1. Does that even meet our setup? I don't think it met our criteria from what we are doing. All right, so that week started on the 7th. So the first question we'll ask ourselves, we come to Monday, we are supposed to be selling. On Monday, we are supposed to be selling. All right, that's the 7th. So 7th and the 8th. This changed on the 9th. So 7th, 8th, we are supposed to be selling. All right. So on the 7th, we'll come to our charts and ask ourselves, first question, did Friday's high take out the high of Thursday? No, it didn't. Don't have business with EJ. Then we'll come again on Tuesday and ask ourselves, did Monday's high close above Friday's high? No, again, we don't have business with EJ. Now we come on Wednesday, which is the 9th. This changed somewhere on this date. Let's go and confirm when, but it really doesn't matter. So we ask ourselves, did Tuesday's high close above Monday's high? Yes, it did. This is the day we can now start looking for potential sells. But price did not give us any because we'll be looking at the bullish candles. We're waiting for price to close beneath the highest bullish candle. And price just kept going up and up and up and up and up. And eventually our bias changed to a buy. So our bias changed to a buy on at the close of that candle. So that will be at the close of the London session, basically, we changed to a buy. And price doesn't ever come back to create a new low of the week. So EJ, for the last 2 weeks, we've not gotten any setup as far as the strategy is concerned on EJ. Actually, since I can tell you when we had the last setup, you can go and do your own check. The last setup we had on EJ was, as far as this strategy is concerned. And if you are going to be trading this strategy, one of the things I warn you early is that you will have like 2 setups a month. I'm just going to be very frank with you. Pape, you will have like 2 setups a month. So if you are looking for a strategy that makes you trade every day, this is not a strategy for you. All right. But if we look on this particular, let's look at this particular day. Let's look at this particular day. All right, the 16th of February. The 16th of February. That was when we had our last setup on Euro JPY. So first question, the week starts on the 14th. This is 11/14, so the week is starting here. Did we ask ourselves, the Friday take out the highs of Thursday? No business with EJ on Monday. We'll come to Tuesday. Did EJ take out the highs? The Monday take out the highs of Friday? No business with EJ. Wednesday, did Tuesday take out the highs of Monday? Yes. Now we have business with EJ. All right. So EJ takes out the highs of Tuesday. Now we're in business. We start watching for the highest bullish candle, which is this. Price closes beneath it, right here. The markup for the candle. All right, so price comes in, picks you up, and boom, 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 boom. All profit targets met. So that's that for EJ. Let's do gold and then we'll wrap this up. Let's do gold and we can wrap this up. All right, so we entered into this week looking to buy gold. We got into this week looking to buy gold. Okay, this will even help me to mention something I didn't want to mention, but I don't mention it. All right. So if we're in an uptrend, then we don't expect price to close beneath last week's low, really. So once it does that, as far as me, I am concerned, the way I trade, that is the end of it. I stop looking for buys. But let's look at this first. So we'll go to H1, we open the week looking for buys. Open the week looking for buys. So gold, we open the week looking for buys. So we started the week on the 14th. So first question we ask ourselves, did Friday's low, is it lower than Thursday's low? Yes, then we can have a potential trade today. So we'll draw a line at our low, the low of yesterday. Actually, we have an indicator that we use for this. I don't know why I didn't put it on my chart. All right, so the high low, where are you? Daily high low. Oh. Oh, colors are set to none. Why is that? All right, sorry, just a moment so that That makes our work easier. Okay, close. So we're waiting for, this is Monday, we're waiting for price to trade beneath that line. So once it does that, we'll start looking for opportunities to buy, which we also don't get. We don't get that, and then price changes into a sell. So that is that for gold. Gold, like I said, I don't trade gold, so I'm not really sure when last you gave a setup, but let me see whether I can eyeball one. Not seeing any potential setups here. This won't have taken out the lows of Friday. Again, this didn't take out the lows. Okay, let's look at this day. Let's look at this day, 25th of February. Okay, we actually didn't get a setup there. Didn't get a setup there. Didn't get a setup there. All right, so let me just give you a trick for what I just explained. Now, if you're using the high-low, if you are using the high-low indicator, what you want to see when you are trading on any day where you have a potential, you want to see a step down. All right, so you want to see a step down. That's basically what you want to see. You want to see a step down. If you see a step down like this, your discount conditions have been met. All right, that's any other freebie I'm going to give out this morning. So for those in the first stream program, we discussed how to use our ATR, our weekly ATR, to frame our profit target. So how do you know that your SL is too big? It should be based on, there should be a way to generate it, because you don't say 30 pips on GU is too big, because 30 pips on GU is way different from 30 pips on GN. So you need to have a way that is unique to each pair to discover whether the SL is too big or too large. How do you frame your entries or your exits? Your exits now. Talked about SL, profit targets, just use the ratios like that. Or for me, I always want to make sure that my profit target is within what I call the possible range. So the possible range, we usually terminate using the average that every pair moves in a weekly basis. And of course, in the first stream program, you guys know how we do that. So I think we can stop the recording for a while or pause the recording for a while. All right, so I just wanted to show this. So let's just be in the anti-roots. All right, so for those on the first stream program, they'll be getting these alerts on this strategy, so they don't even have to bother so much. We ask them. So during the whole training process, they're supposed to do all this manually, learn to see the ideas for themselves and all that. But once after this, they'll have access to this for about 3 months, free of charge. So it just complements the whole trading. So this will be decided to revive this. So automate the whole trading process. For me, the EA doesn't just send alerts, it actually takes the trades for me and manages the trades right through, even though I like to supervise the trades manually. So that's about that. So when we asked you guys, those that were in the last in the EA class that just finished, we actually coded we looked at coding this together. In fact, we actually went a step further than what you see here. What I did with them, we got to the point where we are drawing other blocks. Let me see what I can quickly show that. Sometimes when we say we are giving out some of these classes and all that, people don't understand what it is that we are doing in particular. So trading can be a whole lot easier than. So let me do this. GU just for time's sake. Let's just do from 28 down to this point. Let's look at visual mode. So I'm not just me coding. I actually taught how to code all this, and those in the EA class, it wasn't just the coding alone that we did. We ended up looking, because of course to code you need to understand the strategy that you're trying to code. We ended up looking at so many strategies, so many strategies. We looked at BTMM, we looked at slingshots, we looked at coding an EA that closes all your trades at a particular point in time, doing risk management and all that. So it was actually an interesting one. Let me take this to the end so we can always see. All right, so you can see that. So once all your criteria are met, this was the one we did in the coding class. Once all the criteria are met, check out the highs and close beneath that bearish candle, it draws out this and basically takes the sell. All right, so this was TP1. TP1 was already hit, and then just continue. So that's basically how that works. Eventually, this went on to go and hit our final TP, and of course, this would send alerts to you as well. So these are the alerts that we now see on the Telegram group. So entry is this, SL is this, TP1 is this, TP2 is this, RR is this. And of course, this one, nobody should ask me for this. Please don't just bother. I had a horrible time even trying to give it out to or sell it to some people. I kept on having to do plenty of support that I'm not sure I want to do at the moment. So this will take the trade, manage it to completion. Those are that went through the EA class. They learned how to do that by themselves. So maybe you can get meet one of them to code something for you. But at the moment, that is it. So Bishop, I think you can take it up from here. Hello, Bishop. Oh, let me stop this.